Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. Hello and welcome to this episode of the Australian Finance Podcast. I'm joined by Hayden Smith. How are you, mate?
Yeah, good, Owen. How are you?
Very good, mate. Very good. I got just my posture up because you're looking very, very healthy, very straight posture today. We're going to be talking about investments on the Pearler platform, so the community data. We're going to dive deep into that. Differences in age groups, preferences, men and women. We're going to talk about technology and a little bit of digital advice. So we're going to try and start with the investing and the finance and then move through into more technology, which is what I really love to talk to you about. I mean, I just like to talk to you in general, but those are the things that I really like. Now, Nick, your co-founder at Pearler, has pulled up some data on the difference between Australia and the US in terms of what the way people go about investing. Can you share some of that with us?
Yeah, it's crazy different, actually. When you look at just our top 20 things people invest in on the ASX versus the US stock markets, like NYSE and NASDAQ, all of the top 20 Australian ones are ETFs, like VAS, IBV, stuff like that. Whereas when we look at our US investors, it's mostly direct shares, in particular tech stocks and stuff like that. There aren't as many ETFs. Only a third of the top 20 are actually in ETFs. And even then, I think one of them is like, they're like leveraged ETFs. They're not kind of these like super boring ones. So people basically look like they're more comfortable taking bets, basically, when it comes to the US stock market, whereas they reserve their ASX stuff for simpler investing, I guess you'd say.
More boring stuff.
Yeah.
Which kind of makes sense too, right? Because if there's some great companies in the US and then here in Australia, there are too, but you can
for sure
get great ETFs off the shelf here.
Yeah, and when you think about it too, it's like some of the most popular ASX ETFs like VDHG, DHHF, VGS, IVV, VTS, they're all going to already have large amounts of US stocks in them. So it's not that people who invest on the ASX aren't interested in investing in the US. They're probably just a bit more like, I don't mind picking them all. Whereas the US, when people invest in the US, it seems much more like they've heard about NVIDIA and then go, I want to just get into that and make it happen.
It's quite interesting because you've also got some other data which talks about the differences in core and satellite. We often talk here on the show, but just across the RAS network in general, that a big part of the way people use core and satellite investing these days is they use ETFs for their core. I mean, I do this too. And then they have shares for their satellite, maybe it's thematic ETFs, maybe you've got some like cryptocurrencies or whatever the case, Bitcoin, whatever you want in your satellite. What does that data shake out to be on the Pearler platform? Yeah,
so I think you're right, firstly, that it's not so much that there's ASX investors and US investors, like a lot of people dabble in both. What's really interesting is about 1 in 6 things that people invest in on Pearler are direct shares on the ASX or the US. That means if they've got a portfolio of 6 items, that one of those is not going to be an ETF. However, and that's about 16% of their portfolio, but when you actually look at how much money they put in it, it's really, really small. So whilst it might be 1 out of those 6 investments, only 3% of all the money we see flow into Pearler actually flows into those direct investments. So it kind of makes sense. Like if someone's investing 100 grand, they might put 90 grand into VAS and 10 grand into NVIDIA. Now, in that sense, their portfolio is 50-50, 1 stock, 1 ETF, but most of the money's actually in the ETF.
Yeah, it makes sense. It's much easier to be confident in ETFs, right? Because they're inherently diversified, at least most of them are.
Yeah, and this is something I think we started embracing a few years ago with our customers too, which is like, it's human to want to take bets. It's not responsible to take big bets, So if our customers are like, I want to put 1% of my money into crypto or 5% of my money into Tesla, it's like, cool. Like, I don't do it, but like people buy scratchies. Yeah. No one thinks that buying a $2 scratchy a week is like bad. Yeah. Spending $300 on the pokies is bad. So trying not to kind of denounce bets in general, but just say, keep it.
Yeah. Well, it makes a lot of sense since you put it that way. You don't go and buy $1 million worth of scratchies, but you might have $1 million of super diversified across ETFs, and that's okay.
Yeah.
Yeah. Now, I think I've asked you or Nick this question before about the differences between the way men and women invest. What does the data reveal?
Thankfully, not a huge difference across the board. We have roughly, we have like 52% women on our platform, 48% men. The average median ages is about the same. We don't see like these big stark differences. Usually there's some obscure things. Like for instance, when we looked at our ESG data, so basically those ethical social governance stocks or ETFs, I think women were 3 times more likely to invest in those than men. But besides that, there's not a ton that's different. Like it's not like we see like twice the money flow in from guys as we do from not guys or anything like that, which I think is a nice thing, because I think it would be pretty depressing looking at the data and seeing that difference. But
I would say that maybe Sharesies might be one that's like maybe more female in Australia. I can't think of many, like Blossom's probably more female, but that's just like private credit in an app type of thing.
It's pretty strange that we have so many women investing on our platform, particularly like for a company that when you go to their about page, it's just like 2 white guys from Australia. I feel very lucky because that's awesome. I think any sane person would enjoy that, like making something that is fairly universally accepted by people, right?
Yeah, definitely.
But it's funny because I think all Nick and I ever set out to do was to just build a platform that wasn't financy. Like we never sat down and were like, we're going to choose blue because blue gets women excited. We mostly sat down and were like, we never go like women will like this. We often just go like, this reminds us too much of those annoying dudes, or those annoying finance people, or like the traders or the people doing economics or studying business studies at uni who think they know it. Like everything's always been about like, with those people and just getting them away. And that seems to have paid dividends well for us in terms of attracting a fairly diverse crowd, which is awesome.
Yeah, cool. Another question that I have for you is something that we're just talking about off air. You guys have come out with a product, I say product in the financial sense for people that are unfamiliar. You've got this Home Soon tool that helps people with like buying a home and those types of things, and a bunch of different things. You offer super now as well on your platform. But a big hurdle we've talked about before is like property. And you mentioned off air that maybe there's like some sort of arbitrage here. You could, maybe stay a renter for life or something like that. But more and more I'm hearing people say, not so much explicitly saying it, you could just sense it in the sentiment from them that the Australian dream, quote unquote, of property first, white picket fence, golden retriever, all that sort of stuff, isn't realistic. Do you find that, or is that just maybe more anecdotal from my end? No,
it's not realistic. And I think we'll all get over it. I thought about this a little bit recently. I was visiting my grandpa, and he's lived in the North Shore of Sydney, a fairly nice area. He's kind of this weird idiosyncratic part of my family where most of my family on my mum's side's like pretty not well off at all.
Yeah.
And then he basically was like an upper class guy that raised a bunch of upper class kids who turned into middle class adults. It's like the really short, like the really broad paintbrush. And it's like, I was at his place and he has like this 900 square meter place, really old home. And, he's like 98 and
lovely. He
won't be around for very long. And we talk a lot about, what's going to happen with this place and stuff. And what got me interested was I was sitting there and I was like, if you were talking to your dad, who's, long gone, or your grandfather, and you told him that you only had 900 square meters, you didn't even have space for like a garden, you didn't have space for goats, you didn't have space for chickens, would they be kind of disappointed in you? And he was like, he thought about it and he's like, yeah, probably. He'd probably think I like didn't get to live the life, And I've been trying to be more positive lately and be like, it is just part of that journey where like, I don't think our kids are going to see a townhouse as anything other than an awesome outcome. We're still at probably the tail end of the detached dwelling, for city dwellers at least. And anyway, sorry, that was a bit of a long answer, but I think it is an unreality, and it's just, I don't think there's going to be a good solution for it. Like there's more people every year. It's not like we're building much. I think eventually we'll just realize not everyone can have everything and we'll be okay. It's the same reason no one's upset that they don't have 6,000 square meters anymore. And everyone's just the same and happy.
But then what takes its place? ETFs, do you think?
I mean, just smaller dwellings.
Yeah.
I mean, ETFs too, for sure. Like, that's not to say like one over the other. It was more just like, I think the Australian dream will evolve, and that I do think people will want to own.
Yeah.
I think I wish they didn't, because I think I wish the government would revamp how they assess primary place of residence and pensions, and I wish they put better protections for renters, and I think that would solve the problem for like long-term renting, but I don't think that's going to happen, sadly. And in that case, people are still going to want to own. I think it's going to be smaller places. Yeah,
because that's what we were talking about, what you were mentioning off here, is if people did have that more of that security come retirement, then maybe their view of long-term rent would be much more palatable.
I think everything's cooked around the fact that primary place of residence is exempt from the asset test for pension, because that basically just says to you, if you retire without capital that you live on, you're going to be worse, notably worse. And I think I think there's probably smart ways around that. But I think whilst that's the case, it basically says to rent in retirement is to be poor. And I think that's really problematic, number one, because the financial advice I give anyone is you want to own. And that's really cooked, because it's like, it shouldn't be a requirement. There should be like a common path that people can comfortably choose not to take. So that upsets me a lot, that it's just financially silly to not own where you're living when you retire.
87% of people buy ETFs on the Pearler platform. When money hits the account, 87% of the time that's going into ETFs. I'm just going off what I think I read last time, but I think that's still true.
Yeah, it's around about that number for sure.
Yeah.
It's awesome.
I think we may have spoken about this before. I feel like that's not normal across the industry.
I don't know other companies' numbers, but yeah, I would be shocked if that was normal. And you can figure that out pretty simply by, and I won't name companies, but you go on their Instagram stories when you're on their marketing mail list, and all you're getting is like, here's what's happening with this stock. You know, and I was talking to someone about this recently. It's like, you got to remember, every single time one of these companies emails you and talks about a stock or a couple of stocks, they are genuinely just trying to get you to log in and buy or sell it. Buy it if you don't own it, sell it. If you do own it, buy it if you own some of it to buy more. And there'd be no way they're sending out that many emails if only like 15% of their customers were like, you know, invested in shares. Because obviously there's a correlation where if you invested in shares, you're going to trade it more. So yeah, I don't know the numbers, but I would expect many of those platforms to be maybe closer to 50%.
The reason I bring this up is I feel like maybe to you and I is like, it's kind of like, we'll talk about AI in a second, but like we're seeing like most new investors are what I would call like ETF native investors.
Yeah.
They are investors who are like, hold on a second, ETF, I'll just do that. You know, why am I doing this other stuff? Whereas if you go to a generation before, they were more like, well, I don't know about that ETF thing. I've seen some scandals in my time. This thing could, you know, blow up as a bubble. And I think to myself, well, what's probably caught you by surprise? So what's something that wasn't obvious but worked really, really well? Because everyone now, with the benefit of hindsight, can be like, yeah, ETFs. But what's something that potentially has worked well on the platform, or for you, creating this stuff that you're like, I didn't know how well that would do, but it's done really well?
I think probably just the degree to which there's not one thing in particular. Like, it's the way people have used Automate or set up goals or all these kinds of things. Like, we never would have thought that people would be this engaged with their finances, I think. Because when we started Pearler, we were just trying to get the financial independence community on.
Yeah.
We thought they were going to log on, set it up once, and then check back in a year. And then as we started to get more customers on the platform, it just astounded me how much people just loved it. Like, we'll add a feature onto the dashboard and people are like posting it on Instagram. You know, they're like, they love the finance part. Like, it's not just, you know, the ETF part they like. They're excited about it. And I never would have guessed for people to, like, when I meet someone who's like, I use Pearler, there's a reasonably high chance, maybe like 1 in 3, that they look at me like I built something that like changed their life. like deeply change their life, like the trajectory of everything about their future. And that's always shocked me in a great way. I thought we were just trying to build a tool, like a brokerage app that was easy to use. And in the end, we built these things that seem to be these pivotal moments where people get their lives together, kind of like a gym sometimes, it feels like.
Yeah.
Or like the first gym someone went to, whether they're going to go to the gym for the rest of their life. And that's been what surprised me the most.
Because you've built a lot of stuff in your time. Like, you're a software engineer, right? You could build a lot of stuff.
Yeah, I can build stuff, yeah.
Yeah, right? Like, a lot of us are just like really envious of that because we're sitting back here thinking, I can't do any of that stuff,
Yeah.
But this thing called Pearler's reached like a lot of people now, and it's growing faster and faster and faster, as I can tell. Do you pinch yourself with that?
Yeah, I mean, it's I'm a really bad salesperson. We're growing faster in terms of more people every month are signing up than the last month, but as a percentage growth, it's broadly similar. Not to oversell ourselves. So we grow at something like 5 to 8% a month.
Which is huge.
But
which is huge.
When you're 10,000 customers, obviously 5 to 8% a month is what, like 500 a month. When you're 100,000, it's like 5,000 people. I think we're projected to do like 20,000 in January because January is always a big month. Then you think 20,000, call it 30 to be round, even though it's not going to be 30. But then you're like, that's like several hundred people a day. That's like, whilst this podcast has started, there's been like multiple Australians who've downloaded this app. But yeah, no, I massively get the pinch moments. It's wild. I mean, the thing you might appreciate this as a business owner, but it's hard to feel completely overwhelmed with joy for those feelings because, maybe it's like having a child. Like, you always know it's not always safe in the sense that, like, something bad could always happen. Like, my brain's always thinking about, are we protecting our customers' data? Is the app broken? Is the app up? Like, there's all these things that stop you from fully indulging in what you've made. I think I might have said this to you before. I describe it like a house of cards. Have I told you that analogy?
No.
So, when you're a kid and you used to like put cards up like this and you put the thing on top. And it's like, let's say you've been working on it for an hour and you put lots of these together. Someone comes over and they're like, that's amazing what you've done. It's incredible. And you're just sitting there being like, yeah, but just don't touch it. It's right on the edge where if I do like one bad move, it could all just go pop. So there's this weird feeling where you acknowledge you've done a lot of work and made some cool stuff, but it's also like still in the grand scheme of things, a baby. So yeah, it's exciting, but people probably overestimate how much you sit around being like,
yeah, for sure. No, for sure. And there's still, like, I don't know what the data is on CommSec, but I'm pretty sure it's over 1 million.
Yeah, we're still
huge.
tiny. Yeah. Like, so, we feel tiny.
Yeah. So there's still plenty of, it's like greenfield, brownfield. If you're into finance, it's another word.
Yeah.
Brownfield means there's something already in the ground and you can kind of redevelop it or build on top of it or whatever. But there's a huge opportunity there for you guys to continue scaling. And when you said like the percentage is the same, people who are familiar with math and compounding, when you can maintain that percentage at scale is a true like work of art because you are adding huge numbers every month. It reminded me of Xero, the accounting software. From memory, it took them 10 years to get to 1 million and then it took them 2 years or 3 years to get to the next million.
Yeah.
And you think of that compounding curve, which is really impressive. So credit to you guys for building that. It's really, really cool.
Yeah, I think about that. We double every 18 months or 2 years, if you look historically. And then I think about that sometimes and I'm like, wait a minute. That means that in 5-ish years we'll be at 1 million, assuming that rate stays the same. And I don't believe it. In my head, intellectually I'm like, it's doable. But emotionally as a human being, I'm just like,
yeah,
that sounds, young people get this where you're like, if you explain the math to them that they'll be able to work and save and own a house and pay it off, even if the math makes sense, they're still just like, I don't know about this. Yeah.
But, with financial independence, you and Dave talk about this on the podcast too, is there are certain moments in time where you start to see the benefits of compounding, like your money. I often say to people, it's like, $100,000. If you can get to 100, don't think about full retirement. Think of 100
Yeah.
and just keep growing. But you already, like, you're past that in terms of the business, I'd say.
Yeah. Someone asked me this question, when do you know you made it?
Yeah.
And I always say there's like milestones. Like first customer is always like, wow, someone's using our platform. First customer who put in $1 million was like, wow. When we appeared in our competitors' surveys, do you use any other apps? Here's a list of 5 apps, and we're in that. That was like another wow moment. Running into people on the street. I've gone to the strangest places in the country and just like run into people who use the app. We have a thing on our website. It's really cool for anyone listening. If you go to pearler.com/about-us, you can also find it on our nav bar. We have like a map of Australia where we put a pin in every suburb. Yeah. And it's like, like the place I grew up has like 64 people in the suburb I live in Sydney has like 37, wow. Which is just like in this like, 500 meters each way. And that's like another pinch it moment. I'm sure one day if we ever start doing classical advertising, if we make it that far and put like a ad on a bus, I'll like be just watching that bus go past in the city one day and be like, Jesus Christ. So I think it's just always those moments, those little step changes.
Yeah. Yeah. I remember seeing that map. That's kind of cool.
Yeah. I love it so much. I sometimes I look at it randomly every month and just be like, this is sick.
When I was in Sydney, maybe 6 months ago, I went to my favorite burger joint, which is Bar Luca.
Yeah.
You know the one up near Circular Quay up the top there? And great burger rec, by the way, people. Like the maple bacon, I think it's called Canadian maple bacon. It's just like, it's out of this world. And they got this thing called a Mega Mac there or something, which is like 3 Big Macs in one burger. And it tastes like a Big Mac. McDonald's is going to hate me for saying that, but it's true. Anyway, I was there and someone had a Pearler tote bag. And I was like, that's cool.
Yeah.
Just randomly. Like they didn't work for Pearler or anything. And I was like, cool.
No, for sure. And I mean, I think it's a full Sydney train seats and stands 2,000 people. And statistically, it's like we have about somewhere in the maybe like 1 in 300 or 400 people. So if I'm on like a train in peak hour, it's like there are like 5 people on this train somewhere that have the app. And it's crazy having this kind of app because I feel so lucky because it's not just a business. It's like a business that changed people's lives. So it's like, no, I mean, they change their own lives, to be clear. I don't think we actually do.
It helps.
Yeah. We're like a conduit for them to change their own lives. But it's like crazy because it's an app, they give you money. They send you like thousands of dollars, which is like such a wild, you have so much respect for how much trust they give you, basically.
For sure. Speaking of, how often do people invest on the platform?
It's about once a month, typically, I'd say.
How much do they typically invest?
It's in the ballpark of like 500 to 1,000. Because obviously we've got micro customers who invest less.
Using
ASX customers who invest more. But if you look at the Automate figures, it's about like 90% of people either invest like they put money into Pearler every week, every fortnight, or once a month. In that like one third. But people invest a little less frequently than that because they'll might pile it up into Pearler.
Yeah.
So it is in the 2 to 4 week range. And the only reason people probably don't invest more is just because we still have a lot of brokerage customers. And brokerage is a flat fee. So it makes sense for them to pool it up. But I'd say about $1,000 a month is like a really good ballpark that we give people.
Okay. So if 87% of people buy ETFs when they either automate or just regular investing, and we said that that's kind of obvious to us.
Yep.
I want to know something that didn't work so well that you thought would land.
I think our community section where we have user profiles landed less than we thought it would.
Why?
I think it might have just been too early. Like we had like one of our earliest theses as a Pearler wasn't about ETFs. It was about finance is right for disruption, for openness. That was like, you go way back 6 years. And it was like, this happened with LinkedIn. Everyone talks about jobs now. They talk about careers and I'm looking for work. And that used to be like really hush 20 years ago, salaries and resumes and stuff like this. You see this with fitness, oh, how's your health thing? That was a bit of a no topic. Now people are on Strava sharing their runs sharing Fitbit data, joining groups. Like, so we saw that this thing was overdue in finance. And it is, you know, people talk about it more. Obviously, you see Rask, the podcast, and all these things. But I think we probably jumped too far ahead in thinking that like people were going to want to more easily kind of just share this within a community. And I think we will get there. But I think we were just really early on that. And we didn't quite get the uptake we wanted of more than like 1% of customers.
Yeah.
Yeah, I think we'll get there. I think it's just, a bit early.
You know, Duolingo, the language app? Yeah, you kind of
I do.
teach yourself, study a language. I remember listening to a podcast that their CEO did, and they were talking about how 24/7 their developers basically have these kind of heat maps of activity on their platform, and they're constantly down to milliseconds seeing what usage is, tracking what's going on the platform as much as humanly possible to get a sense of whether something is working, if something's more likely, if something's going really wrong. Do you have something like that where you're thinking, hey, this isn't working or something's broke or this type of thing? Because you said they kept you up before. I'm just really curious. This is part business owner question, part how do you make decisions around whether something worked or not for the community?
Yeah, I mean, first of all, on the whole, does something broke? We have lots of alerting in place. We have even like paging and stuff. So if the site goes down, someone gets a text message.
Yeah.
Right. The more nuanced stuff around like, is this experience subpar? Are we losing people? We do tracking on that. But we've had to be really careful over the years not to, you can get really obsessed with it. And the example I usually give people is when I first started getting customers, I was looking at our data and I saw that from the day they deposited, I think it was from the day they signed up, only like 30% of people were depositing in the next 2 days. And we thought, okay, we're losing them. We're losing a lot of customers. They sign up, then they think no. But then we expanded this out over 28 days. And we said, you know, what's the gap there? And it rocketed up to like 80. And it was just like the time frame we were looking at was wrong because human behavior is really complicated. And it turns out people just wanted to sign up and think about it for a while. And it makes sense, right? Like how many banks have you signed up to and then just been like, put it away for a week or a month or a day and come back to it? So there's lots of stuff we can learn about where users drop off on the product, but we try really hard not to obsess over where we can because every product's different. Every consumer type is different. A lot of rules with finance just don't apply. For instance, Duolingo, I imagine they can do that because they're basically in like the, you know, the attention game space, right? Where it's like you like need that thing. Whereas like being a finance app, it's like you just can't, even as an example, it's really hard for us to tell based on how much people are investing anything meaningful. You know, numbers are up in January, numbers are down in December. We had more sales this month than ever. Oh my God, are people not liking the platform? I don't know. Maybe it's Christmas. Maybe interest rates went up. Maybe interest rates went down. Like that's one of the harder things is that like a lot of stuff's really hard to draw meaning from. So sometimes you have to go with your gut. I think one of the best things is having run this business for a long time and having talked to so many customers and just having it been my life for, you know, half my adult life. You get to a point where you just kind of know the answer a lot of the time. Like you can go through the app and be like, yeah, this is good enough. Yeah. People will be okay with this.
I've got to admit, Duolingo, I don't know if anyone that's watching or listening can relate to this, but Duolingo has got me. You know, I think I've passed the point where it's like, I am thoroughly enjoying this streak and now the habit is like, the chains of habit are too light to be felt until they're too heavy to be broken. And now I can't break the habit because I'll lose my streak.
I've seen that. I remember it was, I think it was, someone in my life at one point be like bedtime, silence. And then like 4 minutes later, I'd just hear like, I forgot to do Duolingo today. And they like rip their phone out at like 11:30 at night. And I'd be like, this thing is like crack. This is crazy watching the effect this had on that person.
Side note for people, the stock is way down because people are fearful about AI replacing language. Like after Apple came out, I don't know if you saw it, but recently Apple came out with its new version of AirPods, which auto-translate if someone's talking to you in a different language.
I think every global company should be scared all the time, unless you're like a NASDAQ top 20, to be honest.
Unless you own the cloud and the AI infrastructure.
Well, people like the quick side note is like the cool thing about being fintech is that it's really hard to break geographical barriers. We can't just launch in the US because there's different market, different rules, different regs, different tech. That protects us as a business. It limits our upside. Like Canva can just go launch in Sao Paulo.
Yeah.
Instantly, change a language pack or something, a few other obscure things, but we can't do that, which limits the capacity to grow. But the plus side is like Apple and Microsoft are not sitting around thinking about how they're going to dominate the brokerage space in Australia. Being a global business sounds scary as hell.
Yeah. So your average customer, typical customer, I should say, is 30 odd.
Yep.
What I wanted to ask you is, that 30-year-old today is probably buying some ETFs, as we know. It's probably got this core and satellite. Maybe they're having, a little bit of a kind of strategy with individual stocks, maybe in the US. Maybe they're buying a house, or maybe they're slightly disenfranchised and they're going to go a different route. What does that person look like in 5 years? Is there any like shifts that you see underway with the core cohort?
I mean, I just hope that if they've been investing with Pearler for 5 years, I hope that they have a good mix in their life of having some exposure to property, ideally ones they live in would be nice for a lot of people, and that they have more money in ETFs. I think it's really that simple.
Okay.
If the world wasn't so policy biased to be, focused on home ownership, I'd just say even have more money in ETFs. But I think that's the cool thing is like we get to see some people quite early in their journey and see them go from like, a $100,000 to a $200,000 to a $400,000 portfolio. But yeah, I mean, I think maybe the only other trend might be that, Nick and I have been talking a lot about direct indexing. Sorry.
I was literally just about to ask you that.
Yeah.
Because I don't think we've ever talked about that here on the finance podcast. Definitely talked about it on our investors podcast frequently. Can you explain what that is to people that don't understand what that is?
Well, like if an ETF is 200 stocks, why don't you just buy the 200 stocks? Okay, well, it's because you got to know how much of them to buy, and how much would that normally be in the ETF and stuff like that. And for the ASX in particular, there's there's costs associated with each.
Every transaction for each share.
Yeah, exactly. But, there's ways around it. For instance, for people who are really heavy in the US space, because the US market is all custodial anyway, they don't have the chest system. You can actually make really cheap purchases. So you could actually build your own ETF in the US market really affordably. Our micro product, if we had all of the ETFs in there instead of just 10-ish, then you could also do that because it's just a managed fund. But yeah, it's something as like, these fund providers like Vanguard and BetaShares. I mean, they do a great job. I think, they've, without them, we've been missing out on a lot of stuff. But I think there'll be a point where their ability to kind of gatekeep that is not as clear cut, particularly for, non-chess sponsored ASX stuff. And I think that's really cool because the stuff we've seen, and we've talked to companies that do it in the US, is it's not just that you can mimic IVV or something. It's that you can mimic it, but then put a little flavor on it. Like you can mimic it and then be like, you know what, I really don't like anything to do with social media. I don't mind NVIDIA, but I don't want Meta, got bad Insta vibes or something.
Yeah.
And that's something you can't get from an ETF fund manager at the moment at all. So I think we are going to see more of that because it just seems inevitable.
Because this is something that I think about a lot. And I wondered if it comes back because it's coming back to human behavior and what people actually want. For folks that don't know exactly, just to crystallize the idea one more time for you, when you have a direct indexing strategy, what you could do is you could log into your Pearler account and you could say, I want the top 200 shares, just like every other index fund does in the country, except I don't want any company that's involved in tobacco or gambling. And then it's like, here's 180 or 200. We've just got the others that fill the blanks. Here's the 200 again, but without that.
Yeah.
And that makes a lot of sense. Because if brokerage cost was zero or near zero, you could kind of implement that portfolio. You could trade that entire portfolio, bang, done.
Oh, it'd be so cool. Imagine being able to just be like, NASDAQ 10, NASDAQ 20, NASDAQ 50. Like you can just slide that scale down and be like, how deep into the top list do you want to go? So that's something Nick and I are looking at because it's just really cool. So hopefully we can see more of that, because I think it would also just make investing a lot more engaging. Because you don't want to make it too engaging, of course. Yeah. But
true.
The whole thing I always think about is like, it's so evident always in nearly every product, maybe with the exception of a few like an iPhone or something, where people just love boutique stuff to them.
They want to see themselves in it.
Yeah, if someone else is driving their car, they want to kind of be able to tell it's their car.
Yeah.
To some extent, you know. And I think that's one thing that the ETF model hasn't provided. And it not just, because that's the thing, it's like, you know, if you cut out a few stocks in an ETF, it's not going to change anything financially broadly.
No.
But it feels nice.
Can I want to play devil's advocate with you, because I don't think many people talk about this in the country, and I'm glad that you and Nick have spoken about it a lot. In the United States, for everyone that's listening or watching, this is a really fast-growing part of the market, and it's typically people with a bit more money start to do it. But say, this is my analogy, which I can't get past. I'm a bit hung up on this, right? If you go to the pub, or maybe you go and get a drink, you're more than likely just going to grab a Coke.
Yeah.
Right? Like a Coca-Cola or Coke Zero, whatever you drink, Pepsi, I don't know. But you don't get out like a Soda Stream and then brew your own, like mix your own. Like Soda Stream, great idea for people that love that, good on you. But for most people, they're not going to do that.
Yeah.
So then I wonder, is that the same with ETFs? Are people just like, top 200, who cares? Just do that. Not to like shoot down your product roadmap or some idea that you have right now, but I think about this a lot.
I think a lot of people do like personable stuff, especially if it's only slightly personable, you know, like a car with a sticker on it, or you know, one tattoo on your arm or something. The problem is the hurdle's too big. Like the SodaStream example makes sense, but that's because that sounds like a real effort, you know? And if like, let's say you invest in Pearler in 5 years, if you're like, do you want to buy the Vanguard ETF, or do you want to do direct indexing where you basically just take that ETF and you can just like untick some themes? The friction then is not very much, right? So I think friction's the big part of it. And that would be the problem to solve. Like direct indexing is not impossible right now. It's just maybe, and this is true for a lot of stuff we build, like we're just trying to make it easier. But yeah, no, I there's always going to be some people who take a great deal of comfort in it being the thing that everyone else is doing too, right? They don't want to touch it at all, just be completely stock standard.
So this is a decent segue into using technology to improve financial outcomes. We went deep on that, and now we're just going to emerge, and so everyone can now relate to what we say next. Goal setting. So in Pearler, you can set up like custom goals, I think. I don't know what the phrase is that you give off the top of my head, but I set one up the other day. It was super simple. I think it was like a first home buyer one I wanted to simulate.
Yeah.
And you could just track any goal, and you could set like hurdle rates and stuff like this, and there'd be like gates to get through, like you were saying before. I guess this is one of the things is as we tiptoe as an industry towards digital advice, I wanted to talk to you about this and the role that AI would play in that.
Yep.
Let's start at the basic level, which is current robo-advice, air quotes, robo-advice, seems very primitive to someone like me. So what is your kind of lay of the land? And we'll come back to goals in a sec.
And just in advice?
Yeah, the whole robo-advice thing.
I mean, I think it's extremely inevitable in the short or near term, and by that I mean, you know, in a handful of years, that you will just be talking to a prompt and it'll have all the answers for you. You know, there might be regulatory catch-up like that, but I think there's smart enough ways to do it, and these things are smart enough to know how to say stuff or how to ask stuff. But I was talking with you before the podcast about this, is like, I've wanted to fix up some of our calculators.
Yeah.
And it's been dawning on me, I'm like, I just don't know if they have a place in 5 years. I don't know if a web page with a calculator where you type in some inputs is going to be a thing. Because like, why would it be a thing when you can just say, I need to calculate this. And then you get asked the questions of what you need to answer. And then when you answer them, you know, you'll get fact checked and be like, those numbers don't make sense. Like, are you sure? Do you want to double check that? Because that's a really low income for this question. Or like, there's an exceptional amount of quality that can come from that natural language experience with it. And I think that's just where it's going to end up. I think, you know, I mean, OpenAI and stuff love to talk about this as like, you know, the web browser won't exist, operating systems won't exist, you know, eventually. Like we won't have Windows and Mac because this idea of Windows, like opening Windows and stuff is just like, why? This just trying to serve a purpose. And at some point it's just going to be like communication. So anyway, I just think it'll all end up being a prompt. And I think it's getting better fast enough that I can see how that would eventually happen.
So one of the things that, I'm glad you brought up calculators. One of the things that, if we come back to the goals for a moment, is that you were saying off air as well, is this whole idea of, maybe people call it choice fatigue, maybe people call it like an overload.
Yeah.
But you have to think really mindfully about creating the tools that people use to kind of live out their financial goals and to do all the things they want to do in life. Where do you said that there's a tension. So how do you figure out what you build for people and what they won't need, what they will need? Does that make sense? You said it was in tension.
Yeah, it's funny you asked that because it's actually a lot like the direct investing thing, direct indexing thing now that I think about it, which is like, if you just say to everyone, here's the VAS ETF, people just kind of get a bit like, yeah, but it's not me. But if you just say to everyone, build your own ETF, you pick all the stocks you want, they just go like, that's a lot. Can't you just help me out? You know, they're like the two bookends of the friction. So a lot of what we try and build is very much like, what is like a simple baseline, and then allow people to customize or express a lot throughout that. So if you're on Pearler, for instance, if you go to set a goal that's a passive income goal, financial independence goal, we really only have to ask you two questions, which is like, what passive income are you targeting? Which will multiply by, you know, divide by 5%, multiply it by 20. And when do you want to achieve it by? They're the only two questions you need to set up the goal. But the first question, if we say, how much passive income do you want? We have a button there that says, I don't know. And you click on it and then we go, okay, well, let's unpack this now. It's like, what do you spend every month? You know, what are you spending on this every month? What are you spending on that every month? Okay, here's your passive income. And similarly with the when am I going to achieve it, they can be like, well, I don't know when I'm going to achieve this. Because every goal we think should have a date generally. And then we're like, well, how much do you save every month? How much do you have right now? And then we can help them with that. So it's like there are these ways you can get more involved and help people out without getting in their way. Because no one wants to answer all those questions. Like, you know, there's a lot of sophisticated people out there who don't want to be asked. Anyone who's done a mortgage application knows possibly the most frustrating question, maybe this is just me projecting, is when someone's like, what do you spend every month on groceries or something? And you're just like, I don't care. Like, I don't, like every other normal person, you know, like just can we get on with the loan? So yeah, it's finding that balance between those two things.
Yeah. Do you think that AI in financial advice will be trusted?
Eventually. I think all the companies are moving really quickly, and I'm noticing AI is getting better, and there's a lot of capital going towards it, and I think it will just keep getting better. I had the strangest experience with Gemini a couple months ago where I asked it a question to calculate some mortgage figures, and it like did its whole, you know, dramatic answer, table this, and then it goes, this doesn't look right. Let me try again. Then it did it again. And I was like, what the hell? Like, you know, I was like, that was weird. I mean, I'm like, that's impressive that it checked its own problems. But then I'm like, how does it know to check its problems, but it got it wrong in the first place? But it's moving quick. And I think I'm pretty bullish that this stuff will get way better. I think for the nerds here, there was this thing I did last night, this bit of work I've been putting off for the uni, whereas there's a small system I maintain.
Hayden teaches at the uni, by the way, computer science.
Yeah, thank you. And I thought it normally would have taken me 12 hours. I was basically migrating everything off like a web database called Airtable and trying to move it onto like a local database, SQLite. And I'd budgeted about 12 hours and I was like, I should probably get started on this and get it done over the next few months. And I took about 15 minutes with AI. And what shocked me was it would have taken a couple hours a year ago because the amount of bugs that it would have introduced would have been a lot. And I would have spent a lot of time. It would get like 95% of the way there and then I'd spend time cleaning it up and unscrewing it. And this thing made like one mistake. And I was just like, my goodness, this stuff is just... So I think it will be good enough. I think right now it's too riddled with mistakes and hallucinations and all these kinds of things. But the industry is so small. Like, friends at tech companies, they do this thing where they get one AI to write a prompt to give to the second AI. They give that prompt to the second AI. Then they get a third AI to like cross-check the second AI. And there's like, we're still at the point where we're only starting to now see some services emerge that'll do that for you. Like the marketplace effect. So, in a year or two, I doubt everyone will be using, OpenAI directly. They'll be using these aggregator services that are using them all against each other to try and provide. Like it's all just moving so quick, and I think they will get there.
Yeah, I was. This is going to sound like a very la-di-da thing, but you're a Tesla driver, so am I. And I recently got the new Tesla on a novated lease. Not made of money, jeez.
He talks. I'm sure you've talked about that before.
Maybe, yeah.
You look like you've had listener comments about that one.
There's a lot of Tesla drivers in the community. In fact, it was the Tesla community and Queenie that convinced me to get one for the tax benefits, which then I convinced a bunch of other financial professionals that it makes sense. And now half the team has an electric car, not a Tesla. But anyway, I was driving over to Adrian's house. Adrian might edit this podcast, so thanks, Adrian. Make us look good. And I was driving over to Adrian's house. I was driving on full autopilot over an hour and 30 minutes to Adrian's house. Full autopilot the whole way there.
Yep.
So what am I going to do with all my time in the car, right? So then...
Watch the road, right?
Well, yeah, of course. Absolutely, Tesla. I've got hands on the wheel. Supervised. So I'm driving over there. I've got the ChatGPT app on my phone and I've got the Pro version.
Yeah.
And I've got that in my pocket, like my shirt pocket, because it would be too far away if it was not picking up my voice or whatever. So I had it in my shirt pocket. And I was asking it, how do I create an AI model that would check other AI models as it's building its own financial advice? So just think about this. Let's step back for a second.
Yeah.
AI is driving my car. I'm having a conversation with AI about how to build AI.
Yeah.
And then I was just, as I was going through this vortex, I was thinking to myself, does it all just end up as like the super average? Do we all just become, because everyone knows this now, that if you run a query in some of these, you run a prompt, it will give you like the top 10 search results in Google summarized as the answer, right?
Yeah.
But then if you use another tool to summarize that tool, does it just become mean reversion on steroids and everything just is serving up the same quote unquote AI slop?
I think the hardest thing is that like AI is trained on humanity. So the idea that it's going to be perfect is really hard to ever achieve because it's trained on us and we're imperfect. There's a lot of false information on the internet. I don't think it's necessarily going to get worse in the sense that like AI training off AI will get worse. I think it'll just be very difficult for it to really truly eradicate problems. But I have to be pretty bullish with this in a way too, because like I'm a computer scientist, right? And like nearly no one actually understands how computers work anymore in the sense of like, you think about there's this particular compiler called GCC, which is what compiles the C programming language. And the first versions of Python, the language, were written in C. And at some point, Python started to be written in Python, which is a whole concept to unpack in of itself. But it's like a lot of us go day to day and we don't really understand how all the nuts and bolts work underneath. And we deal with abstractions all the time, which is very different to a lot of other industries out there, where people understand the whole thing.
Like doctors or...
Well, yeah, I mean, now dentists and everyone else, they use equipment. They don't know how it works. We just somehow manage to trust it. And it's like, yeah, at some point we probably won't know where some information comes from, but we seem to have survived abstractions. And it'll be like all things. Like think about the CrowdStrike incident or the AWS incident.
Where all this service, CrowdStrike, people remember CrowdStrike. Probably the non-technical people remember CrowdStrike. That was the day that everyone got the blue screen of death on their Microsoft device, like a year and a half ago, maybe 2. And literally everything shut down.
Yeah. And it's like, I think like what will happen is that everything will be fine. And then we will just have those things which will keep happening now and again will be worse and worse. Mm. Like the CrowdStrike thing by historical standards was crazy. Like brought airports to a halt.
Yeah, it did. Yeah.
And it'll be the same thing with AI. Like day to day, no one's going to get harmed by it. And it's going to be pretty good. And then something absurd will happen because of the abstractions and the degree to which everything is dependent on one another, and there'll be some real crazy black swan incidents, I'm sure, where just one day for some godforsaken reason all the Teslas will just stop in the middle of the highway for like half an hour once every 10 years, and we'll just be like, Jesus, the world's really messed up, and then we'll go back to it and everything will be fine for the rest of the week.
Yeah, imagine. I do think about that quite a bit. What happens if I go to it and it doesn't turn on? It's not like I can pop the hood and be like, it's a carburetor.
Yeah. Yeah.
It's like, I don't know. Does anyone know?
No, and it's like a problem, all that stuff. It's a real problem. But also if you think about it, all that stuff's been happening forever. There's so much stuff in our daily lives that we don't even understand anymore and we just get on with it. So I don't like people who disregard it as a problem, but I think the alarmist people, it's like the world's shown it's pretty good at carrying on. Okay.
So when I asked you the question before where it's about trusting digital advice, I was hoping in a way you would also refer that back to your idea about standing on the train in peak hour and then 5 or 6 other people on the train use the Pearler app.
Yeah.
And they send you money and you're like, wow, they're sending us money? They trust us enough? It's just a pearl, boring investing. People send actual money to this thing, right? I feel like that transition is going to be very quick for people with AI advice because we're already so trusting of technology. They'll go, well, I'm not putting my money into it. I'm just giving it my financial data. It can run a financial plan for me. I'll let it do that. And then once they're at that, they're like, oh yeah, I'll let you invest my money for me.
Yeah.
I'll let you, report back to me every month and just tell me how wealthy I am. If I was to force you to predict when you think we see like a proper version of either AI inspired, AI written, AI financial advice, however people or you want to define that, when do you think we would see that? We are recording this at the very end of 2025.
Look, I think we see it now. I think if you went to ChatGPT or Gemini, it would broadly 99% of the time say great things. Problem is you don't know when it screws up. And I've seen it screw up dramatically sometimes, right? So I think it's really just a case of like, it'll just keep getting fine-tuned to be better. I think it's pretty good now. I think probably the biggest gap is, because I think for listeners too, you got to remember, they often talk about these AI agents, and AI agents are just a fancy way of saying, when you talk to ChatGPT, if you want to do something technical with it, ChatGPT has to give you code for you to run on your computer. Because it can't run code, but it kind of can. It's just, it can't just randomly do stuff, right? So ChatGPT can't just invest in Pearler because it's AI. This is, I think, the problem with the Apple Intelligence, how everyone was excited, but then nothing happened. It's like,
you can say, how's my calendar looking? And that's about it.
Yeah, it has to be able to like connect to the calendar and connect to other things to draw meaning from it. So for instance, as an example, let's say we made an API for Pearler, and we somehow got it connected into all these LLMs, then like ChatGPT could invest for you. But then it's also probably got to connect to your bank, to actually get the money sent and a few other places. And then when we ask for your ID, it's got to have your ID, and then it's got to somehow have access to your phone and all of your files to get it. So I think like a true, like this idea technically of like a true universal financial advice, financial planner, financial actioner of all things is very doable. It's mostly actually on the company side that'll slow it down. Because technologically, I don't think there's any reason that ChatGPT, Gemini, and all these couldn't right now actually do that stuff and just set up Pearler, invest all your money, track it, message you, set up text messages. It's just it's actually just the LLMs exist in a bubble. And that's kind of a good thing, because when I say we don't trust them, what if there's that 1% bug and it just like decides to sell your Pearler portfolio? So there's a lot of long-term.
Donald Trump tweeted today, sell everything.
Yeah, exactly. So like businesses, there's like a long-term, there'll be a lot of time it takes businesses to allow integration for these agents to actually do stuff. And there's got to be an incentive for those businesses too, which right now there sometimes isn't, right? But then also these models have to get better and far more robust for that to work.
So I was running some stuff on it last night, and I was saying, design me an ETF portfolio. And then I was like, give me the resources of which you base this recommendation of this portfolio. And then it came up with VAS, but it linked to VIF, which is VIF, which is the Vanguard Vanguard fixed interest thing, like a bond ETF. I'm like, no, you said VAS, but you've linked me to VIF, like this thing.
Yep.
What are you doing?
And it's like, sorry.
Yeah.
You're right.
You're right. I got the exact
if
answer
you know
for
I'm
you.
right, why did you do it?
Yeah. And then it's so sure of its correction, and then it still gets it wrong, and you're like, damn it.
Yeah, that's the robustness problem.
Yeah.
So I think it's like once it's more robust, which I think will happen in a couple of years, easily, probably, then it'll be a great companion to talk to. Like you get to walk into a financial advice office and just chat to them.
Yeah.
But the next hurdle will be the actual managing stuff for you. And I think that's a much longer time frame, but we will get there.
But say, for example, with you guys at Pearler, right? You have this huge head start. You're at, I don't know what you're at, over 100,000 users, say?
Yep.
Like active users, and you're going to add potentially 20 or 30,000 more just in January, right? The guys who are AI natives at the moment, the guys and the gals that are popping out of uni and you're probably teaching them, like, yeah, I just use it to do this and that and this and that and this and that. They don't have 100,000 people who trust them.
Yeah.
So you are at a distinct competitive advantage in that you already have this established platform. People already trust you with money. Could you foresee a future where there is a Pearler white labeled bank account that connects to their Pearler investment account, that connects to their Pearler super? You know what I mean? And then those things talk to each other?
Well, that's it. I think 100%. I think it's much easier for businesses to put a chat wrapper on top of their technology than it is for all the chat tools out there to connect to every piece of technology. Like I'm guessing that the long-term play for these LLM companies is going to be selling to businesses. Because I just don't see how ChatGPT can run everything. It's maybe I'm missing something there, but yeah, you're right. It's going to make sense for the Pearler experience to be like a chat thing. Like in theory, over a 10-year period, Pearler, the app, will exist progressively less. And it will mostly be the Pearler friend that you talk to that just manages your Pearler stuff for you. And, you ask it things like, hey, can you just tell me every day how my portfolio is going? But actually, if it's down a lot, can you just not tell me? Or actually like maybe just, that'll be what the app is. There won't be all these dashboards and this and that and all these other kind of irregularities. So for sure, I think businesses like us will turn more into that kind of AI first.
I think we've lost maybe like 80% of the listeners who are like these nerdy guys talking about finance and tech and stuff. But I do have just a couple of questions, and one of them's going to sound, it's going to be out there in terms of most people would probably, whatever, we'll just ask the question. So currently, Gemini 3 at the time of recording is probably the most advanced in terms of its context window. It can take in 1 million tokens, right? Which for people's understanding, give or take an average page in like a document is like 1,000 tokens. So realistically, it could almost interpret 1,000 pages of stuff, ingest that, and give you an answer, right?
Yeah.
In one go.
Yeah.
With the onboarding and the launch of Blackwell GPUs in new server farms, potentially that could look like multiples of that, right?
Yeah.
And you could go to millions and millions of tokens per query. So for people's understanding, what does this look like in practice? Instead of your ChatGPT thinking for like 10 seconds or 50 seconds and coming up with some ridiculous answer that's really long, it might think for 15 minutes and say, hey, go grab a coffee, come back, I got this. Or if you're in computer science, it's like, hey, I'll just take the whole thing, baby, send it to me and I'll solve it.
Yeah.
Are you caught off, are you ever, maybe not caught off guard, but are you ever amazed by how fast it's moving? Because that's scheduled to come online.
Yeah, and it's a big part of why maybe this makes me a bad tech founder, but I try not to get too obsessed with what it can do, because I've seen countless times where time and energy people have put in has been made redundant like 6 months later. Because in a way, what you're really doing when you build with these LLM tools is you're trying to build around their deficiencies. You know, like there are companies out there that will like, you know, like I think I have friends at Atlassian who like basically they wrap something like ChatGPT, and their job is to make sure that ChatGPT does not answer questions about how to build a bomb or this or just random stuff like that. And it's like they could spend months working on that, and then there's just like a newer version, GPT-6 or something, and then suddenly that's all out the window. Yeah. When I first started using this in programming, you know, you got to imagine, I think for the listeners, that like when you're programming a code base like Pearler, it's like having a massive folder of documents. And the AI could only ever like take in a few documents at a time. And now it can take in all the documents, which is the context thing you're talking about. Yeah. And all the tools that existed to try and manage that now don't matter because the LLMs are getting bigger. So yeah, I'm amazed by it. And it also makes it very difficult to know what to build to, because it's just changing so rapidly. So I'm trying to approach the whole thing with a great deal of caution. There's actually a good analogy. I love you talking about tokens, because I remember someone explained the size of the model they're training is kind of like, and you talk about self-driving cars, the size of the model is like the net of all of your experience driving ever. And then the context window is like, you think about when you're driving, you're always making a decision. The bigger the context window is like, imagine you just like woke up in your car right now on a random street. A bigger context window is like you remember the last 1 second of driving versus the last minute. And obviously if you're on a random road somewhere and you remember the last hour of driving, your ability to like contextually make a smart decision there is a lot better, which I think is like a cool way to think about.
That is cool. The context window is your windshield, and you've got a split second, or you've got a minute, or you've got 10 minutes, or you've got 2 hours.
So the more you can feed in, the more understanding they have of trying to make a decision. But what it's trained on is all the experience. So when they say the models are bigger or they have more parameters, that just means like, imagine a superhuman that's just seen more stuff, you know, basically. Yeah.
Yeah, like a wise old man that's lived for actually all of history.
Yeah, exactly. Yeah.
So and this is kind of coming to the end. I'm going to ask you some rapid fire, just funny things at the end. This is more for the investors in the room, like myself. I always think I sold Google shares a few years ago like an idiot, like an absolute idiot. I'm like, I didn't buy the whole search is going to get crushed by AI, but I was like, this just isn't inspiring to me anymore. Like, I don't know, any like Tesla or something else. What an idiot. Like seriously. So I sold that and now it's up like 10 times. That's fine. Yeah. Next, move on. I always think to myself, software companies are way better. Technology companies are way better than the rest. You know, like I think that if you could create software that people love, we all know different products. Like you might spend $2,000 on an iPhone, but what you're really used to isn't the physical form. It's actually the software that's inside it. That's what you're interested in. Do you think that these technology companies still have those competitive advantages? Like if we just talked about AI being able to write code?
In the AI space?
Just in general, like some of these companies, like say like TripAdvisor, right? You could probably get one of these super
so you're not talking about like the big four. You're talking about just tech companies
control
generally.
The world, basically. But imagine
like the Duolingos of the world.
The Duolingos. If you're like, hey, Chad, make that for me. And it's like, give me an hour, come back. And it's got like a prototype and you're like, wow.
Yeah, competitive advantage is hard. The whole thing with tech companies or software companies in particular, if I just focus on like really software heavy companies, is they can grow fast and they can be killed fast, right? Because they're a strange business because there's no friction to growth. And this is like if Bunnings want to grow, they have to open more stores, hire more staff. Software companies don't have that. I don't think Duolingo probably has staff in Australia. And when you think about that, when you think about they're able to accumulate revenue from Australian citizens while essentially having no staff on the ground, no massive infrastructure cost, the marginal cost is near zero. It's a very strange type of business. That's why software is really weird. But yeah, it does come at the effect of it is hard to be protected by it. I think that's always been the case though. I think AI is just another challenge that they face. I remember I had a friend who used to work in strategy at Canva, and they said that the people who run Canva, basically view the things they're focusing on as like existential threats. So when AI came out, they were like, AI is an existential threat because they saw the idea that at some point, eventually like Gemini you'll just tell Gemini the presentation you want or the Instagram post you want, and it'll just make it. It'll make the video and it'll make the whole company, everything they've done, totally redundant. I think that's true for most tech companies. Every company has a different kind of moat or protection. Brand is one of them. If you're a brand, it doesn't matter if people do the same thing. Network effects is another one. It's much harder to kill LinkedIn. It's much harder to kill the dating apps or things where like for it to be successful, there's a critical mass because that's where the value is. It's hard to kill things that are regulated because they tend to be more like we talked earlier, like geographically relevant. So all of those things kind of protect businesses. So when I see a business like LinkedIn, or the dating apps, which are weirdly high on the NASDAQ, or a couple of them or something, I think they seem safer than the Duolingos of the world. Because it's all just about like how easily could you just make a better version of that thing.
Yeah. Grok sends me these daily reminders. I test out all the AIs, obviously you can tell how passionate I am. And Grok sends me this thing where you can like regulate tasks. And in the beginning it was like, hey, I'm a big fan of Simon Hill. He's Australian that teaches people about well-being and diet and good lifestyle stuff based in the US now. But I was like, hey, copy Simon's 10 principles. I think he calls them the 10 truths. Send me those reminders every day as a checklist. And that's been running for like a year and a half. And now it's gone from like, it's like Chinese whispers. Grok has then interpreted it so many times that now it's onto like, what kind of car, like how was the drive today? Or, some other random shit that's got nothing to do with the original prompt. And it's just kind of like iterated itself into this totally abstract thing. But it's, like that was an example of how I took something that was like a habitual app. And I was like, Grok, you do it for me and just see what you come up with. But it came up with some crazy shit, which maybe in the future it works. Okay, one more question on technology, then I'll get to these quick ones, is it seems to me that over the last 5 years, the silver surfers amongst us have discovered YouTube. And by that I mean people over the age of 55 have gone, holy heck, I don't need to watch Channel 7 at night. I can just watch whatever I want, whenever I want,
That's
continuously.
True. Yeah.
On our podcast, 35% of people that will interact with this podcast are going to be watching on smart TV. Mind-blowing, right? Yeah, wave to the camera. Mind-blowing, right? Like me, I was like, wait a second, really?
Yeah. We're filming this?
Crazy.
Oh, no.
Crazy, right?
Yeah.
I watch some podcasts on TV, I got to admit. I don't have an aerial in my house, so I have to watch something connected to the internet, right? And so I think that maybe there's a window here for everyone that's listening and made it this far through the podcast to say, hey, use AI in your career, use it in your business, use it in ways that you are going to be serving things to the people that don't understand how you made it necessarily, but benefit from it. Just in the same way that you and I have probably been watching YouTube for like 10 years at least, because we were early on that movement and we figured out how it works. If people now could embrace AI and figure out how it works, even just in just the surface learning, that could be pretty profound for their careers or what they build or their just in general, their lifestyle. Would you agree with that?
Yeah, double.
Yeah.
Like there's just no curiosity pays dividends for sure. I think there's no downs. This is true for everything really. I think like everyone, as much energy, like emotional, psychological energy that they have left should just be spent trying to learn stuff. it will do nothing but good for you. It'll either help your career, your finances, your mental health, your stress levels and stuff like this. And I think AI is obviously a really good example of that. Just ask it a question. Just like have the energy to think about it. Be like, hey, how much is the mortgage repayment for a $3 million house, by the way? I don't know. Okay, it'll tell you. And be like, all right, well, how would I decide whether I should buy that? Like just talk to it.
Yeah.
And it's hard when you're older because the older you are, and I'm 32, you're about my age, I think.
35, yeah.
But yeah, and it's like the older you are, the higher the lower the propensity you have to use it because you have less gaps in your knowledge, you know? So you don't naturally ask it questions. And like, you got to remember there are 16, 17-year-olds out there now who they talk to it every day. They ask it questions like it's a private tutor, like it's their parents, right? I remember being a kid, you just ask your parents, how does this work? Dad, how does this work? You know? And
I've got no idea. I didn't do math methods. Oh, God.
So it's like they're just talking to it. And like, if you're not talking to it, you're not learning like them. So just tinker, you know, and I think if people are ever struggling to learn something new, I always tell them, don't attempt to learn the thing, set yourself an objective and then use it as a method, you know, because I always see these people like, oh, I'm going to learn Python, a programming language. And I go to the website and I go to a tutorial. I'm like, no.
Yeah.
Sit down. Like I gave this one thing to my friend once. I was like, they like dogs. And I was like, I want you to write a program that gets all the photos you have of your dog and it creates a collage out of them, you know, a big grid of them, but it does it in a way where like, you know, when you stand back from it, it looks like the dog.
Yeah. Like another picture.
Pictures. Exactly. And I was like, I don't know how to do that either. I'd have to like think about it. And I was like, just set that as your North Star. And then everything you're learning is in service of that. And it's like when, you know, you're talking to it in the car, it's like, if you're someone who feels like you don't have the energy or the time to learn, do it under the guise of a clear goal, because none of us that are busy, and I sure don't, have the capacity just to be like, I'm just going to learn this thing.
Yeah.
It's like learning a language, like going to Italy in 6 months makes you learn Italian.
Oh, for sure.
But just sitting around being like, I'm going to learn Indonesian is like, why? It's when you're tired and stressed, you're like, why?
Yeah. Well, it's like everyone would know that if they travel overseas, but with your finances too.
Yeah.
You set goals. We talked about how you can do that inside Pearler. If you want to join Pearler, there is an offer at the moment. Pearler is a sponsor of the show, which I'm very grateful for. There is an offer at the moment where you can place one trade for free for a month, like every month for 12 months. So effectively, if you're dollar cost averager, if you're building your core portfolio, it is zero in terms of brokerage fee. So you can establish your portfolio and get great habits over the next 12 months. So even if you're not new to investing, even if Nick and Hayden are going to hate me for saying this, even if you just want to take your big swings over in Pearler, you can go and place some nice meaty sized investments over there. You can get it brokerage free, which is awesome. So check it out. There's a link in the YouTube description or podcast player. Hayden, I've got some questions for you. Here on the end, these are a bit more fun.
Yep.
Worst advice Australians keep repeating?
I hate watching young people buy investment property apartments in like 30-story buildings where there's like 400 apartments.
Yep.
Thinking that it's going to make them a ton of capital growth.
Or they buy those really cheap apartments in like Cairns or something like that. You're like, yeah, you know how much it costs to do a kitchen? It's the same price as a regular house. So, number 2, one habit that builds wealth.
Working more. I know that's a crass one, but like teach yourself how to work more without getting burnt out or fatigued or learn just whatever. Everything will flow from that.
Yeah, I like it. Number 3, most overrated fintech feature.
Charts.
Yeah, agreed. I said candlesticks charts. What a joke. Who invented those?
Too many charts, I should say. Some charts are good, but too many charts.
Final one, the best innovation in finance in the last decade.
I love everything that's happened with the NPP, new payment platforms, the Pay ID, Pay To, all this kind of stuff.
Is that Osco, like where you can pay instantly?
Osco. Yeah, like I think we take it for granted now, but it's crazy to think that you can just you go on Facebook Marketplace and you just turn up and you're like, here, I'll send you $50, and it comes through and they have it
instantly.
And because you send it, it's secure in that sense. And it's changed apps like ours. It's changed just the experience people have. People forget that, receiving money via Pay ID for businesses doesn't cost them anything. Like a lot of people forget that like businesses get charged huge amounts from credit card merchants.
I didn't even think about that. Holy heck, you just blew my mind.
Well,
we take everything via Stripe and they take so much money from us.
Yeah, and the way to think about it is like, why is it happening? And it's because people want to pay by credit card instead of Pay ID. Why do they do that? It's because of points and other offers and stuff like that. So it's basically like businesses get hurt by the gateways because of all the offers they provide. Because why would you, like, I want to pay for stuff on a credit card instead of Pay ID. I get travel insurance. When I book a Jetstar flight, I get travel insurance with my credit card. If I Pay ID Jetstar, I don't get anything, But yeah, all that stuff's really, really cool. And there's probably a lot of tech that's yet to kind of fully manifest from that.
Cool, man. That's great. Well, Hayden, this has been heaps of fun. I know you jumped on a plane for this, so I really appreciate you taking the time. We've got the Aussie Fire podcast, pearler.com. I'll put all the links in the show notes. Really appreciate it.
Awesome. Thanks, Owen.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.